Good morning and welcome to this weekly market update. My name is Nick Schofield from MLC Markets in London. Haven't done a webinar in a couple of weeks, had lots of things on. This week what I'm going to go through is a weekly outlook of euro dollar, pound dollar, euro GBP and gold. As usual, I'll go through the weekly charts, daily charts and maybe the 4 hour just to give some sort of weekly perspective. Regarding moving averages, etc., the red one is the 55. These are simple as well. So on a weekly chart, be 55 week moving average, and on a daily chart, be 55 day moving average. The purple is 100, and the gold is 200. Okay then. So what we have here on this is EURUSD on the weekly chart. As you can see, what I'll always do is I'll always start with this fib here. I think I've normally drawn this up a few times. Let's draw it properly. Yes, what we had here, I mean, initially you could see around, hopefully you can see the mouse cursor key here, we had the 50% retracement, we got a nice bounce off that, and it rallied up. Then we had some sort of reaction around here at the 61.8, but we didn't get a touch here at 78.6. But we are starting to rally now, and as you can see, that 61.8% level acted as nice support there on the weekly. I'll just draw it there for you. I'll change colour as well, actually, so you can see it better. Yeah, you can see we had a nice little reaction in the last few weeks. We've been bouncing off that 61.8 at 130.46. And last week's candle is this kind of dragonfly doji, really. So still a bit of indecision, but you got to look at the lower wick, really. A very strong lower wick, a big lower wick, which is indicating that the buyers have come in the market. So initially the sellers brought that price all the way down. We bounced off that 61.8, and we've now rallied straight up. But we didn't get a green candle close. But still, a lot of people were saying that's very bullish and would be expecting some sort of upside this week. So in terms of the weekly chart, the upside resistance level would be that 50% retracement, really, as it acted as previous support, now is new resistance. So 134.07, if we get there, would be a key resistance on the weekly chart. The next major resistance will be that 100-week moving average, which comes in at around 1.35. 33. So the two big resistances on the weekly chart. Just delete that eclipse now. In terms of the daily, I'll just delete that big fib as well. In terms of the daily, quite an interesting chart, the daily chart. You can see the price has been stuck in between this range between the 55-day moving average and the 100-day moving average. So as you can see, these moving averages work so well. It's literally just been, the moving average has just been squeezing price within that range. We've had no daily candle closes within outside of these two key moving averages for the lot. Well, how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So it's well over a couple of weeks, really. We haven't had a daily candle close outside of these key moving averages. So you have to just think logically and think, if we get a daily close above it, then we're going to shoot up, and then the next resistance will be that 200-day. And if we go downwards, then the next zone of support will be the lows, really. That's in terms of the moving averages. In terms of the Fibonacci levels, very interesting. I'm just going to zoom to the 4 hour now so you have a better view of it. As you can see here, we had a nice bounce off of literally to the pip off of this 50% retracement, a key support zone. And also look how it confluenced. We had a nice confluence with the 200 bar moving average on the 4 hour. So a lovely confluence zone there. And so we had a really strong 4 hour candle on the daily chart. That was pretty much a very strong reversal candle. And we're now rallying off of this 50% zone. So the odds would be that we'd go up and test the highs here, the 0.0% level, which comes in at 1.3320. So key resistance zone I'll be looking at this week. If you look at just this week, really, it doesn't really matter what chart you're looking at. Any chart will be these highs at 133.20. So the odds would be, I mean, let's say if we look at the weekly chart, very bullish. The daily chart very bullish, although it needs to get above that 100-day moving average. So if we get above that 100-day moving average, then the first resistance will be those highs at 133.20. And that's about it really on the daily chart. I really would have this fib up on your chart, because it's all about those highs there. If we get a break and daily close above this 100-day moving average, which is looking likely, if you just look at those candlestick patterns, looks like we're going to get a close above, and we will test these highs. If we test those highs, then it looks like we may break, and if we shoot up, then that 200-day moving average will be a very key resistance zone. Okay, then let's move on to cable. On cable, this is the weekly chart. Mentioned this before, a very nice trendline support that we have there. I should change it to a thicker colour so you can see it better. Very solid trendline support, and we also have the resistance line here, very strong resistance line that we have around there. So we're kind of near this resistance point now, so very interesting on the weekly. I mentioned quite a few times about this 100-week moving average here. You can see it acted as very strong resistance multiple times. Highlight there, we see it. We struggled to have a weekly candle close above that, and now we are starting to shoot up a bit. And the next key resistance zone on the weekly will be this 55-week moving average and trendline resistance confluence, which will be a very, very key area to have on your charts. So in terms of the weekly, it's really about what happens at this 55-week moving average and trendline resistance confluence zone. That would expect to have a lot of sellers coming in at that point. If we get a break and close above it, then the 200-week moving average will be the next resistance zone up at around 160. Let's go to the daily now. Just get rid of all those. I'll leave the trend lines on there. Zoom in a bit. I mean, last week, I don't want to dwell on too much what happened last week, but in terms of fibs, I'll put the 38.2 on because this is what happened. I mean, I don't normally like to use the 38.2 because I don't think it's that strong support level as the 50% or 61.8, but at times it does work very, very nicely. As we can see here, last week the key support zone was this 156.63 level, 38.2% retracement. You can see it reacted very, very well with previous support as well, and it also, look how it we have a nice confluence with that 100-day moving average. Didn't have a daily close below it, and we've bounced up, and we're now ripping to the upside. And those highs, and actually, sorry, also we've had a nice daily close above this 200-day moving average. So the odds are very, very similar to euro-dollar as well. It's all about the test of these highs, the 0% level, and that trend line. That's what I would be looking out for on your charts this week, because that's going to be a very, very key resistance point on your charts. But yeah, in terms of weekly perspective, you've got to say it's looking to the upside in terms of technicals. I mean, of course, you have all the stuff with the grease out in a minute, maybe finalising a bailout and all these meetings that keep on being delayed. But it looks like a second bailout is going to go through, and if that I mean, it's most probably priced in. But if it does happen, we'll most probably get an initial spike to the upside, so be careful in terms of that. I thought we'd just have a little look at Euro Sterling briefly. In terms of the weekly, what do we have? We have a nice trendline support that's starting to hold quite nicely, having a bit of consolidation here. In terms of the weekly moving averages, as spoken about previously, when we had that big weekly decline below that 200-day, We do also have a golden cross here, 100 and 200 week moving average cross down. Some people will be selling this, but in terms of the candlestick perspective, we're in an uptrend, and we have these quite a few lower wicks here on euro sterling, meaning that we should have a bit more upside in euro compared to pound sterling. But you can see we're having a nice bounce there off that trend line, so the odds really are to the upside because it seems to be bouncing very, very nicely. So if we do get a very strong bounce this week, then the key support zone on the weekly chart will be this 100-day moving average at around 0.085. Okay, let's swiftly move to the daily chart. Nothing really different here. I mean, we've had a daily close above the 55-day moving average. So the next resistance on this daily chart will be the 100-day moving average. Nothing really in terms of Fibonacci levels. I mean, you can draw from low to high here. We've had actually that's a very nice zone. Had a lot of, it's quite messy, but if you can clear the mess up, you can see we had a very nice reaction off this 61.8% level here. Look at all those daily candle closes that we failed to close below that 61.8, and now we're having a nice bounce above. So what it's looking to do is get above this 38.2% level, and trying to shoot up and take out those highs at the 0.0% level. So you could leave that chart up there, not the chart, the Fibonacci retracement up there. Maybe if we come back down and test the 61.8, it would expect it to react off it again. But yeah, in terms of weekly outlook, it just looks bullish really. I mean, we've had a nice bounce off the trend line, and I would expect that we would test that 100-day moving average this week, which comes in at 0.8435. Okay, let's have a little look at gold. We'll initially start with the weekly. I showed this many times before. We have this beautiful weekly trend line which is holding very well. We had that big confluence off that 55-week moving average there. Beautiful support zone. A lot of big buyers would have been buying off of that 55-week and trendline support confluence, and as I said for the last few weeks, you just got to be looking to the upside really. People always buy gold on the dip. I mean, look how long this trend line's been lasting for, well over 3 years now. So people just buy gold on the dip, and all this uncertainty in the eurozone, etc., etc., people continue to buy it on the dip. In terms of candlestick perspectives, last week was a hanging man. I'll just highlight that for you there. Oh, this isn't going to work, is it? Where's that disappeared to? Well, yeah, instead of drawing a circle, if you can just see that last week's candle, it looks like a hammer, but as it's in an uptrend, it's called a hanging man. So the sellers brought the price down, and the buyers came back in, pushed up, and we've had a bullish candle close. So odds are for it continue to the upside in terms of the weekly perspective. Okay, but if we move to the daily chart, we also have zero resistance zones really. Actually no, I lie, we do have this trend line resistance. If we bring that in, that is the key resistance that I would have. Obviously it's broken above all these key moving averages, but it'd be very interesting to see. As you can see, we have quite a few candlesticks which failed. As you can see, we had these candlesticks here which failed to close above that trend line. So I would have that trend line on your chart, because a lot of people will be focusing on that. See if it yeah, I'll draw it from there, that high there, and see what happens at this trend line. You see it's very near to it at the minute. If we get a candlestick close above that trend line, then the next resistance zone will be these highs here. Just make this bigger for you. These highs here, which pretty much at 1800. So that'll definitely be a line that I'd have on my chart if we get a close above that trend line. As a lot of people will be looking at that. Obviously it's a round number, so 1800 coincides with those highs there. So we get a break and daily close above that trend line, then that will be the next resistance point that I'd have on my chart. Okay, that is actually no. I will show you quickly show Forex Factory for you and see what economic data is coming up this week. So it's always useful to have. As you can see, today is a US bank holiday, so very, very quiet day in terms of news. What I'll do is I'll bring up the weekly calendar. Yeah, so Tuesday, what do we have? A lot of overnight news in Australia and New Zealand. Monetary policy meeting minutes. In terms of the UK, at 9:30 on Tuesday, we have public sector net borrowing figures. What do we have on Wednesday? China HSBC flash manufacturing PMI, always very interesting to look at. See how stocks react, and also euro dollar is very important. See if, what sort of risk on sentiment we may have in terms of the UK. Actually, no, in terms of Europe, we have a lot of flash manufacturing PMIs out on Wednesday at 8:30. We have French, German, and the Eurozone one. 9:30 UK, we've got MPC minutes. 3 o'clock, US data, existing home sales expected at 4.6 million. What do we have on Thursday? We have big Eurozone data out at 9 AM. German IFO business climate, that's always an interesting one to watch. Expected at 108.7, previously 108.3. We also have the weekly US jobless claims out at 1:30 PM, expected at 350,000, previously was 348,000, so not much difference in the expected number there. And on Friday we have UK revised GDP quarter on quarter, expected at -0.2%, so a contraction here. Previously it was -0.2%, so that will be very, very interesting to look out for. And on Friday we have US new home sales expected at 316,000, previously 307,000. So quite a quiet week really in terms of economic data. I mean, there's a few bits each day, but not a massive amount. We don't have any rate decisions or, well, apart from Australia, we don't have anything in Eurozone, US or UK. But it's still quite an interesting week. Obviously, it's going to be more about the Greek bailout package, what happens with that, if that's going to go through. It'll be very, very interesting to see. But yeah, definitely keep an eye on those levels on your charts. And yeah, just be safe really, and hope your trading goes well. I'll catch you next Monday. Have a great week.